Warren Buffett, Ray Dalio, two names that stand tall in the world of finance. These names resonate in the financial world, echoing through the halls of Wall Street and beyond. They are giants, legends in the making. Their wealth, astronomical, their influence, unparalleled. But their true impact, far greater than just numbers on a balance sheet. They've changed how we think about investing, transforming it from a game of chance to a science. They've shown us the path to financial freedom, guiding countless individuals to prosperity. Buffett, the Oracle of Omaha, is a champion of simplicity. He preaches patience and long-term thinking. He waits for the perfect opportunity, striking only when the odds are in his favor. Then, he invests heavily in great companies, holding them for decades. Dalio, on the other hand, is a master of complexity. His strategies are intricate yet effective. His all-weather portfolio is designed to thrive in any market condition. Both men, different approaches. Both men, incredible success. Their stories are not just about making money. They are about creating lasting legacies. They're about mastering the game, understanding the nuances and strategies that lead to success. They're about understanding the principles of wealth, the rules that govern financial success. And most importantly, they're about achieving financial freedom, ensuring a secure and prosperous future for generations to come. Warren Buffett's strategy is simple value investing. He believes in buying stocks that are undervalued by the market. He looks for undervalued companies that have the potential to grow. These are companies with strong fundamentals, such as consistent earnings and robust financial health. They have a history of profits and a track record of success. They have a solid management team that is capable and trustworthy. They have a durable competitive advantage, something that sets them apart from their competitors. He buys these companies when they are on sale, meaning when their stock prices are lower than their intrinsic value. He holds them for the long term, often for decades, allowing their value to grow. He lets the power of compounding work its magic. His most famous investments, Coca-Cola, which has been a staple in his portfolio for years, American Express, Geico. These are just a few examples. These are companies that have stood the test of time. Buffett's approach requires patience. It requires discipline and a long-term perspective. It requires tuning out the noise of the market and staying focused on the fundamentals. But the rewards can be extraordinary, leading to significant financial success. Buffett is a testament to the power of thinking long-term and staying committed to your investment strategy. He is proof that slow and steady wins the race, and that patience and discipline can lead to extraordinary results. Ray Dalio's approach is different. He believes in diversification. He believes in balancing risk. His all-weather portfolio is designed to weather any storm. This portfolio is divided into 4 key asset classes: stocks, bonds, gold, commodities. Each asset class performs differently in different economic environments. By diversifying across these asset classes, Dalio aims to reduce risk. He aims to generate consistent returns, regardless of market conditions. Dalio's approach is more complex than Buffett's. It requires a deeper understanding of market cycles. It requires constant rebalancing. But for those seeking a smoother ride, it can be an attractive option. Section 4. Storms on the horizon. In finance, storms can appear suddenly, casting a shadow over even the most prepared investors. Even the greatest investors face challenges. Market volatility and economic downturns test their resolve. Warren Buffett has had his share of setbacks. His wisdom has guided him through many financial storms. Ray Dalio's all-weather portfolio has faced criticism for being too conservative. Critics argue it sacrifices potential returns for lower risk. No strategy is foolproof. The key is to find an approach that aligns with your risk tolerance and investment goals. Section 5. 2 paths, 1 destination. Buffett and Dalio, 2 titans, 2 drastically different approaches, 1 common goal: financial freedom. Buffett, the value investor, seeks out undervalued companies. He holds them for the long haul. Dalio, the risk manager, diversifies his portfolio. He aims to navigate any market condition. Their stories are a testament to the power of having a strategy. They teach us the importance of discipline. They remind us that success doesn't come overnight. It requires patience. It requires a long-term perspective. Which approach is right for you? That's for you to decide. The key is to learn from the best. Study their strategies, understand their principles. Then, adapt those principles to your own unique circumstances. Section 6. Your journey to financial freedom. The journey to financial freedom starts with a single step. It starts with education. It starts with understanding your options. It starts with taking control of your financial future. Learn about value investing. Explore the all-weather portfolio. Discover other investment strategies. Find what resonates with you. Find what aligns with your risk tolerance and your goals. Remember, investing is not just about making money. It's about achieving your dreams. It's about securing your future. It's about living life on your own terms. So start your journey today. Empower yourself with knowledge, make informed decisions, and watch your financial dreams turn into reality. Subscribe to our channel for more insights and tips on achieving financial freedom.